Tesla's stock price over the last 2 years has been truly spectacular, with returns of over 1,000%. But of course, recently there's been a bit of a setback, and some people think that's because of actions of its CEO, Elon Musk, who's been selling shares. But there's also been some very public spats on Twitter between Elon Musk and other people such as Michael Burry, the big short guy. So in this video, we're going to look at what Elon Musk is doing and why. We'll also look at what Michael Burry has said. And remember that if you do want to support us, you can always subscribe to our channel. So let's look at the price of Tesla to see whether it's overvalued or not in a bit more detail. For comparison here, I've shown Tesla's return over the last 2 years, and I've compared it with QQQ, which tracks the Nasdaq index in the US, and SPY, which is the much broader S&P tracker. Now, if you'd have invested $100 into Tesla at the beginning of 2019, that would now be worth over $1,600. Whereas if you'd have gone for QQQ, that $100 would have doubled, but it still looks like nothing in comparison with Tesla. And the S&P 500 is up by a mere 87%. Now, Elon Musk himself said that the share price was too high. In fact, this was in the middle of last year when the price was much lower than it is today. So this top panel here shows you the share price of Tesla going back to 2017. And when Elon did that tweet, it was only worth $140. Now, for a growth company, sometimes people look at the price to sales ratio in order to gauge how expensive a company is. So in this middle panel, I've shown you the trailing 12-month revenue for Tesla. And despite this plateau, which lasted about 6 months, you can see that in 2021, that's been rising very rapidly. But when we divide one by the other, we take the price of the company divided by the sales of the company, you can see that at the time of the tweet, the price to sales ratio was actually reasonable. It was about 5 times. Whereas if we look at the price to sales ratio right now, it's at very high levels compared to where it's been historically. So I think it's fair to say that there's a lot of optimism baked into the price of Tesla today, particularly when you look at any reasonable valuation metric. Now, if we look at the market capitalization of Tesla, which is a number of shares which are available to trade, multiplied by the share price, then you can see that it's absolutely huge. It's just breached $1 trillion. So if we express the recent fall in the market cap of Tesla in terms of the market cap of Volkswagen, it's lost about 1.5 Volkswagens. Part of the reason for that sell-off is what Elon's been doing. This is a recent Twitter poll which Elon ran, which was asking whether he should sell some stock. They voted 58% to 42% to say yes, sell your stock. And he went on to say that he'd abide by the results of the poll. And in fact, he did. And he went on to say that he doesn't take a cash salary from Tesla, nor does he receive any kind of bonus from them. So the only way he can pay his taxes is by selling some of his stock. Now, that sell-off in Tesla's stock since he made that tweet was not a result of a broad market sell-off. In fact, QQQ and SPY have pretty much kept their value since the beginning of November, whereas in contrast, Tesla's stock is down by about 16%. So this was definitely a market-moving tweet. Now, what Elon didn't mention in that tweet is that he's actually been planning to sell stock for some time. So this was a YouTube interview which he had with his frenemy Kara Swisher, where he revealed many interesting facts about his stock options, but also his plans to sell stock. And what he said was that he's been very reluctant to sell stock so far. In fact, he said that he was the first in and he'll be the last out with Tesla and SpaceX. He also pointed out a large number of stock options which are about to expire. So those are going to have to be exercised. And when you exercise a call option, what you have to do is buy the stock, which you can then sell into the market at a presumably much higher price. And he said when he does sell the stock, he'll incur a marginal tax rate of over 50%, because some people had been complaining that billionaires weren't paying their fair share of taxes. And if we look at the timing of the expiry of those options, he said that a big bunch of them would expire in Q4 next year. Now we can learn a lot about his option position by looking at the regulatory filings, and you can see above me that the price at which he can buy Tesla stock with his options is only $6.24. We can also see the date at which these options expire, and that in August 2022. And we also know that the number of derivatives which are left now is just over 20 million. So what do these options let him do? Well, he can buy Tesla stock at $6.24 when it's trading at around $1,000. So it's not unreasonable to expect him to exercise those options. I mean, wouldn't you? So if we look at this trade, what he did was kind of interesting because he exercised the options on November the 15th, and he exercised over 2 million options. That means he bought 2 million shares for $6.24, so that would have cost him just over $13 million. Now what he could have done was take all 2 million shares and sell them immediately into the market at a huge price differential of $1,000 minus $6. But instead what he chose to do was only sell about 785,000 of the shares. He sold them for about $1,000 each, although the price fluctuated during the day, and he made about $790 million as a result. Now, at the time of that tweet, Elon owned outright about 170 million stocks of Tesla. So if he sold 10% of them, that would be about 17 million shares. So how far along are we in those sales? Well, Bloomberg's done a lovely completion bar, which shows that we're under half of the way through those sales if we are going to reach 17 million sales of stock. So as of November the 15th, he has about 166 million stocks remaining, which he owns outright, and he's still got over 20 million options, which he has to exercise before August next year. So really this is just the beginning of the sales of stock by Elon. There's much more to come. Now, before all the sales really kicked off, he owned in total about 244 million stocks, either directly or indirectly via those call options, and that meant he owned about a quarter of the company. Now, after all of these sales, he'll still own about a fifth of the company. Now, many people are asking, why is he doing it now? The options won't expire until August next year, so if he thought the share price was going up further, he might have been better off from delaying, or at least keeping his mouth shut and not tweeting about it. Well, it turned out that we learnt in another regulatory filing that Elon's been borrowing against his stock ownership of Tesla. So investment banks have been lending him money using his holdings in Tesla as collateral. So why would that have to be mentioned in a regulatory filing for shareholders? Well, it actually poses a material risk to the share price of Tesla. That's because if the share price starts falling, the banks could always turn around and say, you're going to have to sell more stock in order to pay off some of those loans. And that could create a negative spiral where Elon sells more stock, the share price falls further, and the banks insist on him paying back more of the loan. Now, this kind of positive feedback could cause a spiraling down of the share price of Tesla. So if Elon is worried about the share price of Tesla falling sharply, then that might be a reason why he'd sell some stock and repay those loans that he's made. Now, one of the people he's had a spat with on Twitter is Bernie Sanders, who says here that we must demand that the extremely wealthy pay their fair share of taxes. And his fairly unpleasant reply was that I keep forgetting that you're still alive, Bernie. But then he added, if you want me to sell more stock, Bernie, just say the word. Now, there are various theories as to why Elon is selling now. One of them is that he's bearish on Tesla stock. We already saw that he was bearish in 2020, so you'd expect him to be even more bearish now. A related theory is to do with those loans, which he secured against his Tesla holdings. So if he is bearish on the stock, he probably wants to repay those as soon as possible. And the third theory, which I think holds some weight, is that it's not so much about money as doing some really first-class trolling on Twitter. Now, if you're enjoying this video and you want to learn more about investing, a great way to do that is by joining our Patreon community. That way you get to vote on content which is available only to you, and you get to talk to other members of the community as we all learn together. So if you want to learn more about that, just click on the link beside me and in the description beneath me. Now let's look at what Michael Burry is doing and saying. Now, he's deactivated his Twitter account again, but what he said before he did that was that Tesla could fall very sharply. A previous episode in which Michael Burry made a lot of money when equity markets fell was in 2000 with the dot-com bubble, and he says that Amazon fell by 95% in that episode. So by analogy, Tesla could fall by a similar amount. And clearly Michael Burry thinks that Elon doesn't need the money from the share sales. That's because he's borrowed against 88 million shares in Tesla. He also sold all of his mansions and he moved to Texas. So Burry doesn't think this is about getting cash. He thinks it's about being bearish on Tesla. And he also refers back to that statement in 2020 when Elon said that Tesla's too high and that he wasn't kidding. Now Elon, who's not shy on Twitter, replied to Burry via this tweet from Bloomberg, which quoted Burry. And he said that Burry is a broken clock. And effectively he's saying that Michael Burry is a perma-bear, someone who's always bearish, they always think that stocks are going to fall. And if you've got a clock that's stuck 2 minutes to midnight, then obviously that's going to be right 2 times a day. So eventually Michael Burry will be right and stocks will fall. But remember, most of the time stocks go up. So it's not good to be bearish. Now, if you are bearish, how would you express that view on Tesla? Well, one way is to buy a put option on Tesla's stock. So in this graph, you can see the value of a put option as a share price goes up or down. So that's on the x-axis, the share price of the stock. And when you buy a put option, you have to pay a premium up front. So on day one of the trade, you're initially making a loss. And the size of that loss is simply how much you paid for the option. So that's called a put option premium. Now built into the option is the price at which you can sell the stock. And then once the share price falls below the strike, you start making money 1 for 1 on the downside. So in order to make money with one of these put options, you're betting that the share price is going to fall. Now, Michael Burry has his own personal hedge fund to manage his money, and it's called Scion Asset Management. And this is a regulatory filing from Scion Asset Management, which is called a 13F, and that was for positions which he had in summer 2021. Now, he's not bearish on everything. I've only focused on the put options in his portfolio here, and you can see there are 3 of them. One is for ARK Innovation, which is the growth fund managed by Cathie Woods, and she certainly pushed back about that position. Then we've got TLT, which is long duration US Treasuries. So here he was betting that interest rates would rise and push down the value of TLT. And then finally, we've got about 1 million put options on Tesla stock. So now let's look at how these probably fared. Well, it's not great. You can see that for Tesla, clearly the puts would have expired worthless. So he'd have lost his option premium and probably took a pretty big hit on that position. With TLT and ARK, those have pretty much been flat since May 2021, so he might have made a bit of money on those, but certainly not a lot. The latest 13F filing from Scion Asset Management, which was published this week, shows that there are no puts left in his portfolio, at least none that we can see. There's still a way of buying puts which won't be visible on this form via the OTC market, the over-the-counter market. In fact, he doesn't have any options at all. These are all long positions on these stocks. So given all this debate, what is Tesla actually worth? Well, now that Tesla has been valued at more than $1 trillion in terms of market cap, Aswath Damodaran, who's the Dean of Valuation, has come up with a new valuation for Tesla based on the latest information. So this is taken from his video, which is available to watch on YouTube. Now, Damodaran is the master at teaching how to use a discounted cash flow model. Now, of course, no model is perfect, and the purpose of modeling is not to come up with a fixed price. Instead, it's a way of structuring your thinking about what the fair price should be. So what are the inputs to the model? Well, probably the most important input is the revenue growth for Tesla. How much money's coming through the door and how quickly is that growing year by year? And he's assumed that's growing by a very brisk 35%. The second key input is how much it costs to generate those sales. Or in other words, how many dollars of earnings before interest and tax, which is the revenue minus the cost of goods sold, are generated for every dollar of revenue. And what is assumed for Tesla is a very high 16%. Then if Tesla's going to be investing a lot, which you'd expect with a growth company, for every dollar that's invested, how much dollar of revenue does it generate? And here again, he's got a very high investment efficiency of 4 times. And then finally, how much does it cost the company to fund itself? When he puts all of that together, and you can watch his video to see how he does this, he comes up with an estimate of about $570. Now that's half of the current share price of Tesla. And what Damodaran's assumed is almost like a dream valuation where you've got the best of all possible worlds. So if we look at the expected revenues in 2030, he's assumed a capital growth rate which will put it somewhere between Toyota and a company that has 20% market share. Damodaran's margin assumption is that it's going to be 16%. So bear in mind that the average auto company has a margin of about 3%. So this is much closer to a FANG stock like Microsoft than it is to a car manufacturer like Volkswagen. The sales to capital ratio is even more competitive than any tech stock or any auto manufacturer. The cost of capital is on the highest side for Tesla, so that's about 6%, and that tends to reduce the valuation. So I'd say that's the most bearish assumption in this entire estimate. And he's also assumed a 0% probability of failure for Tesla through a bankruptcy. So as he says in the video, I'm telling a really big story for the company. So even that only gives him half the current market price of Tesla. Now, Damodaran's created 5 fair values for Tesla over the years since 2013. Now, the story's been evolving over that period of time, just as Tesla itself has been evolving as a company. So initially, the estimates were based on a luxury auto company with luxury car company revenues and margins, and that suggested that Tesla was overpriced during this long period of time. Then in 2017, his new forecast suggested that it was actually worth much more. And that was because it was also a tech company. Then we had an unfortunate period when Tesla looked on shaky ground, and Elon made a tweet about taking the company private, and he also said that the funding was secured. And then he lowered his valuation as a result of that, saying that the management was unpredictable. But that also suggested this stock was undervalued, and Damodaran bought some stock at that point, which then quadrupled in price. But then he sold out. And in fact, if he'd have held on, he'd have made much more. This is actually a logarithmic plot, so I could show you the share price quite clearly. So gradually over time, he's moved from a luxury brand to something which has mass appeal. And that reflects the fact that we all now see Tesla Model 3s on the roads in most countries. So the latest valuation is very high, but it's still well below the current market price. It's about half. So in this table, which is taken from Damodaran's website, he focuses on the 2 most important variables for valuing Tesla. So that's the revenue in 2032. Is it going to be $200 billion like Daimler, or is it going to be $1 trillion, which means he has 40% auto market share and almost every car on the road is an EV? Then if you look at the margin, is it 12% or is it 28%, which would be truly spectacular. So in summary, is Tesla overvalued? I think the answer is yes. And that's because you have to make unrealistic assumptions about revenue generation, but also margins to come up with a price of around $1,000. So I think even Elon Musk would agree with that based on his own tweets, but also his actions. And Michael Burry would of course agree with that. Now remember, if you do want to support us, you can join us on Patreon, or you can just subscribe to our channel. And as always, thank you for listening.